Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hey everybody, welcome back. I don't know, I'm going to date myself a little bit here, Jeff. And you watch these Nick at Night reruns, and every once in a while Gomer Pyle comes on and says, surprise, surprise, surprise. So this week's version of Minds of the Markets is supply, 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 without a doubt. And I think at this stage of the game, with all of the headlines we've seen back and forth, what's occurred in the social media with respect to tariffs, what could they mean for supply lines and growth? I just wanted you to give us first up here a sense that, everyone's talking about Trump needs a win. So you need some kind of, I guess, agreement with some countries out there. What countries move to the top of the list, do you think, in terms of getting a trade deal done sooner rather than later?
And you don't know how long it's going to take. I mean, it was about a week ago that he said the 3 to 4 week window of time. We're going to get somebody's going to come in here and do a deal, or there'll be a trickle of them in 3 to 4 weeks. So that puts you about mid-May, maybe even late May, when you start to get some of these agreements. We'll have to see. I mean, because think about it, Kevin. When you're negotiating the USMCA, the one with Mexico and Canada all those years ago in Trump 1.0, I mean, you don't just get it done on Monday morning.
Right.
It takes a year and a half. And so that's why this 3 to 4 week timeline is kind of funky. We're in the middle of the 90-day window right now, where everybody gets respite on their tariff level down to 10%. But if you look at the poly market odds, it's very much in alignment with one of the things that we've been saying around here, which is if you think about foreign relations for the United States, a couple of the nations that seem pretty close to Trump, closer than others, would be India and Japan. Those two are being priced on Polymarket about 76% of a deal before the end of the second quarter. India and Japan up there. And then if you think about the pecking order below those, South Korea appears to be willing to come to the table because they're backed into a corner because it's such an export society. Vietnam is high on that list, and the UK, because the UK's been having some struggles ever since Brexit. And then way down the list at 39% chance, the one that you care about most is China.
Right. So, I mean, everyone's talked about the potential inflation ramifications. Obviously, the Fed has that on their radar as well. But in terms of overall growth, I think, something that you found out was quite interesting. Everybody's been downwardly revising their GDP estimates. What's the latest in terms of global GDP? Is it Armageddon or not?
I know. This is basically what we've been saying for some time. And those of you who have been, watching the channel here, this is our YouTube channel here for the Minds of the Markets. We've been basically saying a lot of the histrionics seem overextended. Because remember, Kevin, it's where your own perspective is relative to the consensus. And the consensus is locked in on stagflation, that either be big inflation scares because of the tariffs, and that GDP could maybe even go into negative territory. But if you look at the IMF data, a few months ago, the IMF was looking for global GDP growth in 25 of 3.3. And then, time to revise it down. 2.8. So it's a slowdown. You don't want to make light of it. I mean, you don't want to see the global economy slow down, but from 3.3% to 2.8, not the end of the world. And we think that some of the inflation fears may be ill-founded, I guess you could say, Kevin. And we've been pointing out the supply chain parallels to 2022. I think we have these goldfish memories. We forget the big container ships stuck in the Suez Canal back then. We forget natural gas prices going like this. Here's the chart of the natural gas price when Russia invaded. That's the chart. That's the chart of the oil price back then. We don't really have a lot of these issues. So try to remember some of the things that were going on in the market the last time we had a big inflation scare.
Right. And as you mentioned, putting things in a historical perspective are great. We also had one of the more prolonged episodes was the dock worker strike we had out in LA and Long Beach. And so it's not as if we haven't been down this road before. But, if you look at the headlines and all social media, it seems like, this is brand new territory. And we continue to come back to this notion that, we've kind of been through this. Okay, maybe it's not tariff induced, but there's been other factors involved where we've seen some very similar developments.
You came up with the dock worker, exactly, the dock workers. How about the fact that in recent memory, China was doing COVID zero for like 2 straight years. Literally COVID zero was their policy. We want to talk about a supply chain getting messed up, talk about inflation occurring. How about that? And then also, how long has the saga of the Houthi rebels shooting ships in the Red Sea? I mean, between the two of us, we just named 5 or 6 serious issues. Sum them up and consider them. This time is different, Kevin, but is it? I'm not so sure.
I think that's what better place to end it on that. I think that's a great point. So for everybody out there, there's also a written version of Minds on the Markets on our website, www.wisdomtree.com. And please, if you're watching this, tell your friends, family, neighbors, like us, and we'll be back again in a couple of weeks. Take care, everybody.